Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what are the most commonly used timeframes for trend trading? Answer by Don Chandran K. I go with 5 minutes charts for my trading and I find that best. But I only look at that particular day's chart. Firstly, say no to historical data. We are intraday traders. The name intraday implies that your transactions complete the very same day. You don't even hold them for a mere month like you do in options. So, I don't see a reason why we have to consider historical data for today's trade. I never did that. Why? Simple. Every day is not the same day. You agree with me here? A bus that arrives at 9:30 a.m. and has always arrived at that time sharply for the last 2 or 3 days doesn't have an obligation to arrive at the same time today. It may come early, it may come later, it may never come for that day. Just like that, a stock's price for today doesn't necessarily have to identify its trend and move based on its historical data. Consider this. Real example 1, INFI was trading negative for 2 consecutive sessions. If I were to trade for the present day using historical data, I would have shorted it. But it was this day INFI announced its new future CEO Salil Parekh, so investors gained confidence and the script actually moved in positive trend. If I shorted it as it was a laggard since 2 days, I would have been a laggard. Real example 2, INFI was trading positive for 3 consecutive sessions. If I were to trade for the present day using historical data, I would have gone long with it. But it was this day INFI's then CEO Vishal Sikka announced his stepping down from the chair position. The script dropped big time this day and I would have been into a huge loss had I bought it because of historical data. So, always go with the current data. There is nothing more accurate than the present data. You have news in front of you. You know what happened when you were sleeping last night. You know how the news is going to impact a particular couple. All the scripts. You have NSE website to see who is moving up fast and who is a laggard. Join it with your news and predict if you should go long or short. Keep your 5 minutes chart on that script. It tells you how the trend is going for the news and impact. Enter a trade at the right price. Be confident. Don't negotiate with market. If you profit SL hits, it hit. And that's it. While in trade, keep a loss SL to cover you. So, you can trade tomorrow too. Exit when it is time to exit. Now you have gained your profit. Order a beer for me. Repeat the history tomorrow. While there are other low interval charts, like 1 minute, 3 minutes, I have observed them giving wrong signals a lot of times. A script is actually positive or negative, but there will be few swings here and there, and for 5 or 10 consecutive minutes, it might look like it is coming down to negative trend or vice versa. But, in real, it is not. 1 minute candle keeps you in high pressure. 5 minutes candle is a decent interval and it helps observe price movements in the right way. Give an upvote if it helps. Cheers. Happy trading. Answer by Jay Shah. Daily and weekly. Although of late I have started using hourly and 15/5 of a minute's TFS and they work equally fine, and help in much better entries and RR. It's all about building the right trading skills.